Hey traders, Raghee here. Happy Friday, everybody. Welcome to Charts and Coffee. Great to see everybody. All right, so we have the wrap of a very interesting week where we were just bombarded with major earnings releases. Amazon yesterday had a lot of questions about the expected move on Amazon and how I do that. I'll be happy to cover that if anyone's interested. I see some Amazon questions popping up there. Yeah, we can talk about expected moves. I do it very, very differently. And then we had, of course, the very mild, almost accommodative sounding Jerome Powell. Very, very, I think, clear tilt to a more dovish type. Not that we're going to see lower rates for longer or rate cut, and nothing like that, but just that concern about a rush to taper, that concern about a truncated timeline to the eventual rate hikes. I think that was gone. Very bullish for equities. That FOMC on Wednesday ended up being. All right, so let's get to it. So again, I see all the Amazon questions here in the window. Let's just jump into it, shall we? All right, so sure, let's talk about Amazon. But in order to talk about Amazon, we have to talk about two things. One is the 642 window. All right, so if you've already read it's free on countdowntrader.com. If you've already read how I look at earnings, most of you will know that it wasn't about July 29. It was really more about, if you want to look at mid-June, 6 weeks out, it's really more about June 16, June 17, as far as the window that I'm looking for specifically for a run into earnings. We also had, as you can see back in here, the 1, 2, 3, right? We had that 1, 2, 3 pattern back in here, sort of kicking off a certain amount of bullishness, 1, 2, 3 continuation pattern. And so between this date and this date is what I'm interested in as far as that window for earnings. That means dips like this and dips like this are bought. And then I am out by the time we get to earnings. I'm out. That's the thing to remember. Now, having said that, I'm not going to be in a position. Think about the clarity of a double green market 6 to 4 weeks before earnings. That's number one, because I don't want to insinuate that I was playing yesterday. I'm done. That window for me closed. All right. So then the next thing is, well, once the let's take a look here. Once we get the, once we're inside that 2 week window, we get to a lot of proximity to the date. What is my expectation for movement? And this is really what sets what I do with expected moves apart from, say, what you'd see on your options platform. I don't look at that expected move at all. What I do is I look at historical price movement ranges. This is a DPMR, daily price movement range of Amazon. It has a 6-month look back. Okay. Notice that the very minimum that I should expect is 180 points. What I like to do, because it's the same calculation we use to understand parabolic markets. And if you're thinking, Rog, yeah, I'm not really sure what you're talking about here, head on over to the Countdown Trader. There's an update that Trish has posted about how we measure what parabolic moves are. So I go right back to that very established, very effective parabolic move. And I'm going to be looking for basically 180 plus an additional 90 points as far as what I think that that volatility range could be. So that's how you would prepare for Amazon in terms of before earnings. And if you're going to play something through earnings, what should you brace yourself for in terms of a specific move? And I find that data and that process far, far, far more effective than, if I'm going to put on a shockwave trade. That's what I call holding into earnings, which I do very rarely. But if I want to put on a shockwave trade, there is a shockwave calculation. And that's it right there. So, am I going to play Amazon today? Very tempting to fade it. I mean, I won't kid you. It's very tempting to fade the move, no doubt. But ultimately, what I want to remember is, let's see, hang on one sec. All right. So what I want to make sure that I'm keeping an eye on is, whether or not I'm getting some sort of bottoming pattern. So if I'm going to play that 0 day, John, I need to know what that volatility range is so I can get a better idea of where that floor is. And then I'd have to see it would really be an intraday setup for me. It'd be something along the lines of, an intraday move, an intraday 1, 2, 3, something like that, on a 5 minute or maybe a, 2 minute time frame, 5-2 for a day trade. All right. So next question. If I am buying into the wave at a specific EMA level, 34 or 55, where would I set my stop? Again, line watcher, just sort of generally, I don't ever want to say this is the way we always do it, but the first consideration that I always think about, let's say, what's a good pullback? I'm looking for pullbacks on TLT. I'm looking for pullbacks to buy on XLV. So I'll use XLV because this was a fairly recent trade for us in the mastery. So if I'm going to buy that pullback or this pullback back in here, usually, yes, I'll start with the opposite side of the wave. That's where I'll start. Now, if there's a major psychological level or a Darvis or the 55's been in play, as it has been on the XLV chart, then I'll consider those as alternatives. But when it comes to the options line watcher, one of the things that we do, which makes the trades really, really easy to manage, because I don't ever want you guys so for example, the mastery or the futures room, where I put out the bulk of my alerts, I don't want you guys ever waiting on me to say, well, now's the time to get out. So you're sort of flying blind. That's uncomfortable. That's uneasy. I want you guys to know the full plan ahead of time. I want you to know where the target is ahead of time, the stop is ahead of time. For options, it's a pretty fixed stop. We're risking a certain percentage of premium paid. Therefore, the timing, the specific date, the specific level, the specific momentum is very important, because what you pay for the options ultimately what your risk is going to be based on. I never risk full debit, but I do risk a percentage of debit. So once you buy the option in the way that I recommend, now you know, okay, this is the percentage I'm going to risk. This is my point of validity. So it depends on whether it's the underlying futures contract. If it's a day trade, there's different points of validity. If it's a trend trade, different points of validity. Yours would be a great trend trading question. If it's an option trend trade, slightly different calculation for the point of validity. If it's an option day trade, like we did Wednesday, nice 3x of those 0 day to QQQs. Again, it's a slightly different understanding of where the buy and the validity of the option could differ some. So it's not as difficult as it sounds, because it's just, very specific depending upon the scenario, which makes sense, right? Because the underlying setup and environment really should be what dictates our point of validity, right? Okay, so thank you for the question. Hey there, PH. NQ had a big drop off after Amazon earnings, as it would, because XLY is heavily weighted, third heaviest weighted sector within the NQ, and Amazon is a top 6 name, right, in the NQ or the QQQ. Any expectations for QQQ today, or just trade the setup we are given? PH, I love the way you phrased it. Yeah, I'm going to trade what I see. Right? I mean, there's a lot of things that I'd like to see. There's things that I think, but at the end of the day, we just trade what we see. I'm not bearish, as you all probably know. I'm not bearish the indices at all. And pullbacks in the indices are going to be the gift that keep on giving. And so, when I'm looking at the QQQ or the XLK, one thing I might do to minimize, see, a lot of people want to run towards the volatility. I usually don't, because again, my window for opportunity was before the volatility, and my window for opportunity will be once the volatility, the dust settles. So for me, one of the things that I would probably focus on a little bit more is sort of, well, how do I navigate around Amazon? How do I navigate around that? And when you look at the way in which the QQQ is broken up, right? When you understand sort of the sector secret, if you will, if you understand the use of ETFs, and by the way, that's going to be a big part of what we talk about on Monday. So if you haven't registered yet, simplertrading.com/scale, 8 p.m. Monday. we are going to be talking about how I use ETFs. And this is one of the ways that I use them. If I want to avoid Amazon, XLC, XLK, if I want to go headlong into Amazon, which is fine, XLY. So could I play Amazon itself? I sure could. But that will be an intraday day trade. And that way, if you want to play, the options, you'll just day trade it. And I don't know that I would necessarily assume that I'm going to take it over the weekend. I probably won't, because after a significant move, I actually need a very specific pattern in order to say, yeah, we've now broken that bearish move, and that the sentiment and the momentum is shifting, and that we're clear for movement higher. Think of it in many ways as the way in which, say, crude oil, if you want sort of an example of an extreme move, and then my being patient, crude oil is a really good example of what I'd like to see on Amazon. So I'd like to show you the pattern. That's kind of what I'm looking for in Amazon. What crude oil looks like, that's what I'm looking for. So hope that helps. So do we have blue light specials on Amazon, Alex? I'm going to have to wait and see. But yeah, that I love the questions on Amazon. I hope the discussion about expected move shows you that, like, for example, if you're going to play earnings, what do you need to brace yourself for, right? I mean, those of you that like to go, say, off-roading, that when you're going off-road, it's not the same as staying on the pavement, right? You need a whole lot more travel on your suspension. You need to brace yourself for a lot more uncertainty. How do we brace ourselves? How do we do the calculation? That's how I like to do it. So now I'll see how the markets are responding to that number, that historical price movement range. All right, so let's see here. Bear with me, gang. Let me scroll down to the next question. Let's see. Yeah, so for those of you putting on spreads, Jeff mentioned about spreads. That's how I would calculate what my spread needs to be able to accommodate, what it needs to be able to handle, right? Okay, just watch the GLD summary. Hey there, Don. How do I determine my triggers for entry? Oh gosh, Dan, I mean, we have classes dedicated to the topic of how do you get into a market. But generally speaking, well, let me give you something specific to gold. First of all, I'm not going to set up typically GLD initially. In other words, I'm looking for the market to pull back after that move, which is why if you're in sector secrets and you held on through the Fed, we talked about the eject button that was available to you, which is more of a risk concern than a how much could I make if I stay in, right? I always want everyone to know where the eject button is so they can control risk. But I said, look, we're expecting a little bit of a pullback today because of the way the market moved, the historical price movement range of that specific candle, right? And so, and I outlined all this on the free video last night for Simpler Futures. So if you head on over to the Simpler Trading YouTube channel, which I imagine most of you are probably on right now, you'll see the free videos last night from Henry. And Henry had a really great free video. Do check that out. He had some longer term plays, I think 3-month time horizon, really cool video. And then I've got my breakdown on gold over at the Simpler Trading YouTube channel. Anyway, so we were bracing for this little pullback here. That's why we paid ourselves, moved to a break-even stop. So probably the most important thing in terms of determining triggers for something like GLD is I'm setting up the trade based on GC. And that's where a lot of traders who focus on ETFs based on markets that exist in the futures markets, TLT and ZB, SI and SLV, silver ETF, etc. Look at the futures contract. That's probably the most important aspect of how I determine entries on something like GLD. It starts with GC. All right, thanks for the question. Can I please review criteria for determining directional bias with the VWAP? Again, have classes dedicated to the topic, but what you could do, just a basic thing, is make sure you're using at minimum 2 VWAPs. Really, I use 3. Where are they anchored? First of the year, first of the month, and then I have a rolling 10-day. And so where price is in relationship to those, along with some other factors, right? If you just finished taking the day trading playbook class, there are, roughly 7 things that we look for. Some of them are based on open, high, low, close. Some of them are based on candle patterns. Some of them are based on the VWAPs, as you mentioned. Mostly, probably if there is an overarching focus that I have, it's going to be the underlying structure of the market, right? So let's go back to the S&P, for example. Let's take a look at the S&P. At no time, really, since the end of June, did I have a bearish directional bias. Look at the structure of the market. Look at that JT multi. Look at those 2 rows going along the bottom of my chart that are measuring the 8, 13, 21, and 34 EMAs. Really, at no time did I wake up saying, today's the day to short. Now, the other factors that we'll look at, the VWAPs, the candle patterns, there were some insight within this very bullish overall trend that, hey, if we break this threshold or this particular measurement is suggesting that there's a possibility for some weakness. So it's not that all the gauges are pointing north or all the gauges are pointing south on a particular day. Sometimes you'll have some gauges that are a little bit more sensitive in near term saying, hey, Ron, be aware of maybe today or through this threshold, things could go a little bearish. So we keep an eye on those things, but they're all done on the daily, as are those anchored VWAPs. So make sure you have those 3 anchors and you'll be in good shape, much better shape than most that are using rolling. I do not use that rolling VWAP or unanchored. Do I track MMFI in TradingView? It tracks this number of stocks versus their 50 DMA. So Francisco, that brings up probably a topic where I am straight up a heretic. The number of stocks, meaning a broad group of stocks, I do not use, generally speaking, market internals. I know, it sounds crazy. I don't. You're just never going to hear me talk about the ARMS index or the tick or whatever. I just don't talk about it. And here's why. So I want you guys to know, I'm not being a heretic just to be a heretic. Look, there's a reason sometimes we're rebels, right? And the reason I'm a rebel like Princess Leia was a rebel, like in that awesome way, minus the buns. Why are we rebels sometimes? Because we look at something and say, that's just wrong. Doesn't make sense. And for me, what doesn't make sense is measuring the vast number of equities in our stock pool. In other words, high concentration weighting has really, I think, made these assessments of giant pools of stocks and whether they're ticking up or ticking down or above the 50 or above the 200 or whatever, kind of irrelevant. When we know that high concentration weighting has said that probably less than 2 dozen stocks, and I'm talking across multiple sectors and multiple indices, probably less than 2 dozen stocks have such a disproportionate weighting on where the overall market's going to go. I don't care about the other stocks. And that's why. Now, if it works for you, cool. But for me, it's measuring things that, frankly, because of the dominance of high concentration weighting, which has continued to be a bigger force in the market since '08, when ETFs have continued to grow immensely in popularity, high concentration weighting is everything. I know people like to blame algos or blame this and that on some of the swings we see. Look at the way the ETFs and the indices that we trade and watch are weighted, and you'll say, oh my gosh, it takes 5 or 6 names to really disproportionately influence the S&P or the NASDAQ or the Dow. That's how few stocks it takes to create wide swings, which now makes earnings season even more full of drama. It makes, sell-offs. It doesn't mean that all the stocks are selling off. It means key stocks are selling off. So I don't use internals at all. And that's been now pre-2008, if you were to catch commentary that I used to do for other sites way back in 1999, 98, 2000, 2001, all that in there, you would have seen me use market internals. I would have talked about back then, tick, trend. I used to look at Goldman because it was a heavily weighted stock. There was a number of sort of market internals that I used to look at. And that would have been early 2000s, late 99 or late 90s. And then after '08, and as the high concentration weighting really started to influence the market more, I'd say starting around 2008 and really every year since, It's just been less and less and less till now it's nothing. I just don't pay attention to those internals at all. So I want you to know why, because I know a lot of people use them. I'm not saying you can't. Clearly, you can do whatever you want. As I like to remind you guys, only people on earth that can say, because I said so, are our mothers. All right. GC is doing as I commanded. If you were holding for a re-entry. Yeah. So how would I get back into GC? Sure. Let's say you hit the eject button in front of the Fed, which was fine, How would you get back in? I mean, it won't be till Monday or Tuesday. It won't be today, unless we have a significant move. It would probably be, I mean, you're looking for 17.95. Oh gosh, if we had that again, easy peasy. Yes, lemon squeezy, as they say. I'd be getting along on that one. But I mean, a little bit more aggressively, probably around 18.20 would be an aggro pullback entry. Aggro pullback. But the question is, have we been able to successfully breach 18.35? And it's really not that impressive. This high back in here was 18.35 even. The high yesterday was 18.37.5. So technically, we really haven't breached that upper end, which is why I was so adamant about paying ourselves yesterday. And then we can look for another entry. Now, I do suspect we'll see higher highs, but that's why we made 18.35 our target, right? Because of where we had exhausted before. So, which was a great target for us. That kind of momentum moving higher, that was a great, great target for us. Brings a tear to my eye. All right. So anyway, I have run way over. Thank you as always for joining us for Charts and Coffee. Doing some water in our awesome Simpler Trading Yeti. So again, thanks so much, gang. I love that, those of you getting a jump on the markets early. I really appreciate the time. Hopefully this is kind of pointing you in the right direction for the morning, getting you ready. And again, thanks for being part of the Simpler family. Thanks for being part of the mastery, any of our masteries, any of our rooms. We really appreciate you guys, the dedication and time to becoming better traders. And, you're my kind of people. All right. Have a great weekend. Be careful. Friday is, Friday. I'll be doing a little bit of day trading, I think, today over in the sector room. And I'll see you guys on Monday evening. So if you haven't registered already, simplertrading.com/scale. All right, gang, be good to each other.